Hey, what's going on, traders? Welcome back. Another YouTube video? Oh my God, I'm popping off, dude. I'm popping off. All right, so for today's video, let me demonstrate what I'm gonna be showing you, okay? Watch, just pay attention. Watch me, watch me. Wow, nice place you got here. Okay. It was really nice of you to let me exit and then enter. Oh, see what I did there? Was the bit funny? Likes in the comments, yes sir. Okay, let's do it. Entries and exits. Dude, all right? Let me fire up my chart. Here we go. All right, guys. Back to the same chart we've been looking at all weekend, because I've recorded like 18 videos today. Just in that sort of move. They're all, by the way, the videos are going to premiere on Tuesdays and Sundays for the most part, maybe the occasional Thursday. I'm just going to try to record a bunch of these and set up future dates so you guys have just consistent content just coming out, you know what I'm saying? But what we're going to talk about today is entries and exits. All right, now this is kind of a big sort of topic. It's complicated. There's a lot to it. When do I enter a position? When do I close a position? You know, everyone has the issue of feeling like they missed out, okay, that FOMO, and then that greed. A lot of you guys probably don't stop out when a position starts to go the other way on you, and some of you probably, you know, cut their position once it's green just to see that it runs even more. So you might be up $20 and then you're like, oh, I could have been up $100. How do I stay in that position? So I'm going to show you guys a few examples here just on the past few trading days. There's lots of areas to enter and exit trades. But what you got to recognize in yourself first is, are you a breakout trader, which I am not, or are you a pullback trader, okay, which your boy is. So what that means is you basically are going to buy on a breakout of a pattern or a key level, for example. I do put out key levels, but I don't trade them as breakouts. I actually trade those pullbacks, and I trade them off rejections and stuff like that. Or are you going to buy into demand and sell into supply, support and resistance, because that's what they are, you know? If a supply zone, we're just going to break out every time, why would it be called the supply zone? Why would a resistance be called the resistance if we're just going to, you know, go to the moon always, right? Then it wouldn't be called resistance. It would be called nothing, because nobody would even know that it was there. So I play pullbacks because the odds are with you. You kind of put them in your corner, and you can basically make the odds even better if you combine that with certain areas of demand resistance, or with EMAs, and you know, your pre-market levels, which I like personally, and your yesterday's high day, yesterday's low of day, which I also like a lot. Okay, so let's get into it. So now that we've decided that we're pullback traders, I don't know a whole lot on breakout trading, so you're gonna have to find somebody else, but I do know a lot about low risk pullback trading, okay, which is what I like. Now, where do I enter a trade? Let's break it down all the way back to live price action, because the charts don't look like this when you're actually taking the trade. So it's hard for me to sit here and tell you, you know, take the trade at the bottom over here. You know what I mean? When in a live chart, like look at the open on, you know, this day here. See, it's just selling off. How the hell am I supposed to know it's going to bounce there? You know what I mean? This looks like it's just going to sell off down to $300 again, but it didn't. It bounced. And there's ways we can have confidence take that trade and to actually enter that position. So a few things that I'd like to point out. First off is basically you want to mark down, it's actually kind of done it almost for me here, but I'll draw it out. Let's draw it out for you guys. This is your pre-market high, okay? 313.26. Let me actually, just for the sake of the video, let me color these different so you guys can see what I'm talking about a little bit better. So the yellow lines are new, okay? I know I got a lot going on here. That's pre-market high, okay? Then right here is pre-market low, okay? And then we go back to the previous day and we go, where's high of day? High of day is right there. Low of day is way down here. All right, perfect. That's our yellows. That's our lines, these yellow lines. Okay, so that is what you want to do very first off. And then you're going to look at the volume profile and look at the volume point of control, which is the highest shelf here. And you look at your line. Obviously, it's going to be different if we are in pre-market and the beginning of the trading day, but this is how it ended kind of at the end of the day. I ignore after hours. There's not really a reason for it. At very rare occasions, I'll actually look at it. Like I actually did look at it, excuse me, on Friday, because I was wondering if we were going to be able to break this high, and which we did, and we actually based on it going into the next after hours. But those are the levels you want to mark down, and then you want to look at your EMAs and stuff like that. So let's go back to the open right here. So this opens up, it sells off. What do I like to do? I like to buy on a pullback, but we're below pre-market low, so that's not looking very good. However, we can go back to the previous day because we jotted down here 4 very important levels, and we can look at yesterday's high of day. Okay, so we see this pullback towards high of day. What you can actually do, because at the open, in my opinion, the best place to take are the bounces and rejections. And what's great is that if you find that level or that EMA that you can base your risk off of, you know exactly where to cut that trade, okay? It's very, very simple. Just keep it simple. No reason to be complicated. Now, let's look at this trade right here. So this pulls back at the open, and it's coming down to yesterday's high of day, a very key level, because that was yesterday's entire range. So you break that and you got a major downside, but more often than not, you're actually going to bounce on it. So that would be the trade you would take here. And the other reason, so I won't take a trade just based off one confluence. I'm looking for multiple. The other area of confluence here is, remember my previous video with the EMAs, you guys should go check that out. It's up on the channel. I think it's like 2 videos ago. You can go check that out. But we have the 200 EMA here, and we know from the previous video that I made that the 200 EMA, if price action is above it, you're bullish on the day on the 3-minute chart. If price action is below it on the 3-minute chart, you're going to be bearish on the day. But we're above it. So what we're looking for here is a bounce off yesterday's high of day. So what we do is wait for that pullback. And how do you get confidence to take a trade? You just take the trade. So we snag calls there, let's say, because we have 2 points of confluence. We have the yesterday's high of day, and we have the 200 EMA here. So what we can do is we can take that original entry off of yesterday's high of day, and then we can risk the 200 right here. So that's 2 points of confluence, and we have our risk definition, okay? Now, where do we exit that trade? So now we're in this trade, and we know where to stop out. We want to stop out below yesterday's high of day or the 200 EMA. We can base our risk off the 200 in this case because we are very close to it. And so if you did buy on this pullback, this actually closed above it and then kept going. So you wouldn't have got stopped out. That is your risk right there. And your risk did not get triggered. You didn't get stopped out just to see it run without you, which is beautiful. Okay, so you see that start to rip up. Now, 2 areas I like to sell. So when I enter a trade, I'm putting in my full entry. One entry, I go in full, and then I actually do scale out, okay? I try to have a couple price targets. Not everything's gonna run to 100%, but maybe one will, who knows? But you want to get majority of your position out on what I call a premium push, which should be your first target, and you don't know when it's going to happen. Okay, now what is a premium push? Let me slide over to the right here. So we have some nice space over here, okay? Now I'm going to draw the body of a candle really quick. So here is, let's say this is a candle, okay? I'm actually gonna make it a bit shorter because I wanna kind of showcase something. So let's say it's a green candle and we took calls down here. So let's say, let me draw that for you. Let's say we took calls. This is our pullback buy. You know, the 200s like kind of going like this. That's the 200 EMA. Let me make that red for you. There you go. There's the 200. We bought right off that. We respected our risk. Okay, there was a red candle here. Just imagine it. And then we have the wick, right? The wick is going to be, oops. Oh, shit. I did that wrong. Right, come on, 100. Stay focused now. The wick, let's say the wick is here, okay? And this candle's live, and I'll demonstrate that. All right, so this is a live candle. And now we are seeing the candle, oops, let's bring that down and let's grab this. So, you know, in a live market, you kind of see the candle do this, right? You know, try this at home. It's a lot of fun. So you see the candle kind of like push up and then pull back, then push up and then pull back again and do that sort of a thing, okay? So a premium push is when you're riding that green candle, you're watching that P&L, you're like, oh my God, party time. I'm just gonna sell it right now. You don't have to, because you can start to risk other EMAs as you climb up. But the first target we have is when the candle does this. So you have your wick. The wick goes to right here, by the way. You have your wick and you're going up and you're going up. And then all of a sudden the candle does this and it starts to push above the wick like that. That is when I like to sell as my PT1, price target 1. Because what is happening there is you're basically your Greeks, right, on that premium push, they're getting jacked up. And so that's gonna lift your contract prices exponentially. And they actually could be higher. Sorry, not higher. They could be worth more in that premium push when this candle pushes above the wick like that. They could be worth more than if price action was actually higher later on due to theta decay, especially if you're like me and you trade 0 DTEs on the QQQ. That theta decay can really burn you. So selling on these premium pushes is for sure a great scale out point. If we go back to an actual example over here on the chart, you would be for sure scaling out where this little white box is and everywhere in here. You'd be scaling out because it actually might be worth more down here than over here. You know what I'm saying? So that is PT1. Now for the next PT, for your runners, right, what I typically do is I'll wait for them to fill my supply and demand zone. So obviously we have a supply zone, up here in pre-market high, okay, right here. So that's gonna be PT2. So we've already scaled out 50% or more and made really good money right off the open, just off of that. 2 confluences, take the trade and run it. Now we're pushing up here and let me just get rid of this little messy. There we go. We're pushing up here and where's our next area? Right here. So this would be PT2. So let me show you guys real quick. This is PT1 right there. Okay. That's where we're going to sell in that premium push. I can even write that. And it doesn't really matter where you sell in the premium push. Obviously, the higher the better, but that is the idea, is that you sell in this premium push for PT1. And then PT2 is actually going to be up here in this supply. So PT2, supply zone. All right. And then the third and final way to scale out. So yeah, and then you take profits up here as well. We can mark that just like this. Okay, bam, bam. There's your next scale. So you have a scale in here and a scale right there. And then the next and final thing you can do is you can use my other indicator for riding a position. Pop quiz, do you remember what it was? Go check my other video on my overpowered EMAs where I look evil. And you'll know that you can either ride the 9 EMA or the 20, depending on how bouncy price action is. Obviously, later in the day on this day, we were riding the 9 really, really nice. So what you can do is you can actually you can raise your risk. It's kind of like a trailing stop without actually being a trailing stop, because you'll get knifed on in those things and just lose your money. So what I like to do is I like to do visual stops. I forget what they call them, but and it's all market orders, right? That's another thing to point out. Entries and exits. The way I trade on these 0 DTEs is I use market orders. I market in and I market out, okay? And that's the reason behind that is because I don't have time to sit there and look at what the contracts are selling at and try to put in a limit, and then I miss it, and all this stuff, okay? If you're respecting your risk and you have a really, really tight visual stop, you're going to lose like 10, 15% on a position. And you know, that's it. And as far as sizing in a position, if you have an account under $1,000, you're going to have to go like 30% of the account to 50% of the account. But then above $5,000, I don't consider that a small account anymore. Then you want to start shrinking your position down a little bit. You don't want to put in 30% of $5,000. That's a lot of money, and that's going to be a big toll on your account if for some reason you slip up and you do lose all of it. Okay, so you can raise your theoretical stop to the 9 EMA and start riding the 9 up. If you did that over here on this kind of retest of pre-market low and the 200, once again, that's 2 bits of confluence for an entry. Really, really nice entry there. Then you can ride up this 9, and guess what? You'd be riding all the way to Valhalla, baby. Beautiful, excellent trade. And yeah, so that's the third PT. So I can type that in, PT3, riding the 9 or 20 EMA. And I'll put in depending on price action. Is it bouncy? Perfect. Let me just make that a better or. There we go. And then once again, I can do, like I showed you guys in the how to use TradingView video, I can just drop that down there. And this looks nice. So I'll put that just up over here, PT3. There you go. So once again, guys, this is your entry. I'll even write out an entry thing here. So 2 pieces of confluence, 1 being a key level. Okay, we don't use key levels for no reason. They're key. So 2 pieces of confluence, 1 being key level, and I'll just go back to the beginning here and I'll write entry. I'm gonna actually change that to potential entry. 2 pieces of confluence, 1 being a key level. Obviously, the more the better for pieces of confluence, right? And you get that all the time. Does that make sense to everybody? I think I explained that pretty well. Let me just drop that down there. Beautiful. Okay, and I'll put this over here. Now, the other things that can kind of lead into your points of confluence are different patterns in the market. Just to name a few, some that I really like would be a double bottom, a double top, an ascending triangle. Those are really great ones. But we're going to do a whole video, guys, on reversals and patterns. That's going to be coming up very soon on the channel, so look forward to that, okay? That's kind of all that I have, guys. I hope that I was able to cover that. It's a very big topic, so if there's anything else that you're kind of wondering about, let me know in the comments, and I will try to make a video on that, okay? Let me just pop over and just chatting here. Thank you guys so much for joining me today. This is a bit of a longer video, but it's a big topic, all right? Check me out, guys, on Twitch. That's 100_UHMILLION. Yes, 100 million. Twitch.tv/100million. Yeah, that's where I make most of my content, all right? And once again, guys, if you could use my TradingView code, I'd love it and appreciate it. I forgot to mention that in the last video, so I'll put it down again in here. Thanks, guys. Have a great one, and hopefully you guys can start making some good money and enter properly and exit on those nice, fat, juicy, premium pushes. Yes, sir. Okay. 100 out. I love you. Goodbye. See you in the next one.